Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is investment analyst Cristina Parthenido. We'll be discussing Canadian data and the outlook for the loonie. So Cristina, the Bank of Canada is one of the few central banks that survived the US-China trade war without easing monetary policy in 2019. But the bank's chief repeated last week that the case for a rate cut remains open. Do you think that January's inflation numbers coming out on Wednesday and December's retail sales on Friday could move us closer to lower interest rates?
Not really. Canada's inflation has been around the central bank's 2% midpoint target, and that is not likely to change in January. Markets forecast a slightly stronger inflation reading for January, and as we have seen last week, the labor market remained resilient with wage growth rising faster than inflation, and that all shows that consumers may have remained supportive to the economy at the start of this year, despite the massive household debt, which is another reason why the central bank doesn't want to cut interest rates. While retail sales for December may weaken on Friday, but this may not be a worry given the government's recent income tax reduction. Nevertheless, that doesn't mean that a rate cut should stay out of the plans, especially for a commodity-dependent economy such as Canada. Markets have still some doubts about how long the coronavirus will keep pressuring business activities in the global economy and what the size of this damage could be. And besides that, there's still some speculation that trade tensions between the US and China could escalate this year before coming down. So all these risks keep the outlook for the Canadian economy cloudy and the odds for a rate cut high in the second half of this year.
Okay, turning to FX markets now. The loonie seems to be making efforts to recoup losses after January's sell-off. Do you think that this week's data could add more upside pressure to the currency?
Well, retail sales could be considered out of date, so inflation readings could be more important to look at, since this is the first inflation release for this year and could provide fresh direction to policymakers on monetary policy. So if the CPI readings come in better than expected, then the loonie could find the opportunity to gain extra ground and vice versa.
Cristina, thanks so much, and thanks for joining us at xm.com.